You know the story and history of KenolKobil. One thing that I want you to take note, Kenol, which has become KenolKobil Limited, is a company that was formed in 1959, and since then it has been a public company. It's quite interesting for the history. Remember something else, effective January 2008, KenolKobil became 100% subsidiary of Kenol, and it ceased operation as a separate legal entity, business entity on 1st of July 2011. Again, I won't go into that, but remember this information, it's quite important. It became fully owned, Kobil became fully owned company end of December 2007 by Kenol at that time. Here is the list of our directors, quite a diverse and with a lot of experience from different business areas. I'm sure you all know Mr. Oyatsi, who could not make himself available today because he's attending a court case. He's a lawyer. Mr. Terry Davidson was mentioned, a banker, ex-Citibank. Mr. Mathenge, who used to be a Caltex MD and actually the regional manager. Mr. Per Jacobson, who is based in Sweden, comes from property development. And Mr. Daniel Donier, who joined us recently, auditor ex-Deloitte & Touche. Quite professional board, as you can see. We have all committees in place. We even formed recently a new committee to deal with the investments of KenolKobil. I don't want to go through it, but take note of one of our main missions, of course, is to deliver highest value to shareholders. These are the business lines I mentioned already in the past. One thing I want to draw your attention is to the new business line with its own P&L, which we are developing to do with storage terminals, hospitality. We have it now with its own business, with its own P&L. All the other business lines you are familiar with, non-fuel lubricants, fuel oil, bitumen, LPG, export, aviation, the African trading desk, commercial, resale, and retail, they all have their own P&L. Management, I'm sure you are familiar with it, but I may just draw your attention. It's basically based on 4 groups under the group management. We have the group regional structure led by 2 regional managers, Mr. George Mwangi and Mr. Patrick Kondo, who cover different regions and different portfolio. One of them covers the export, George, and the other one covers the M&A, Patrick Kondo. Then we have a supply and trading optimization, was mentioned here, and Steve is sitting with us. You can as well interact with them later. Group finance, of course, led by Ms. Pat Lai, and we have the group internal audit. I won't go into that details, and I continue with all subsidiaries and investments. Take note, all of them are 100% owned by KenolKobil Limited, and we have from top Uganda, Tanzania, Rwanda, Zambia, Ethiopia, Burundi, most recently KenolKobil Congo, SPRL. Reason because we had to register it as KenolKobil is because there is another Kobil in Congo with a C, so we decided to go with KenolKobil name. And we have, of course, Kobil Zimbabwe, which is operating mainly as a trading arm, an extension of trading of the trading desk for the head office. We take products from Beira and we move it to Harare, and we trade it there, or some of it we trade ex-Beira to other parts of southern Africa, like Malawi, like Lubumbashi, and so on. Retail network, you see the numbers. We have in Kenya, the only country where we operate 2 brands, still operating 2 brands is Kenya. led by David Ohana, as you have been told. We have 89 stations of Kobil, 67 stations of Kenol, and then we have all these countries with the stations. We are talking about 401 as of now service stations, and we hope by the end of this year we'll have 413 based on organic growth, not with any M&A projects, which can be there. As you know, we are quite active. We do trade, and trading of oil, we mean moving bulk oil mainly from the AG, some of it from Singapore, some of it from West Coast India into East Coast Africa, and these are the countries we trade with, and you can see the whole list. And then I'll just take you quickly through the performance. What I like about this chart, it shows you the history of this company from 1991. And so we are talking about almost 21 years record. And you can see the chart movement in terms of total sales. This year, for the first time ever, we actually crossed the 3 million cubic meters. 3 million cubic meters sales. I think it's quite impressive in any terms, any size, any other markets you go with this kind of volume, it's quite impressive. So the segments, you can see retail, commercial, aviation, trading. The African trading desk, as we said, it's a business line on its own, and you will see its contribution quite interesting. Only trading alone is about 1.5 million cubic meters. Overall overland export, which is a separate one from the trading. They bring products to the different ports, and from there move it overland. So you can see the lubricants sales. As you know, we market our own brands. We have the LPG business line. Look at the sales volume. We are very close to 9,000 tons, and we truly want to be even above it, and we believe there is a great future in that, and that's why we've been investing in the last few years quite a lot in this area, and we'll be talking about it. The non-fuel, in terms of, this is more monetary, but take note, we included the income from the depots. In future, we'll separate them, and we will have the depots hospitality income as a separate business line. The reasons for that being now segregated from this year is because we truly believe there is a great opportunity there, especially in view of our new terminal in Dar es Salaam. We are just about to complete a major project in Bujumbura, where we intend to do, besides trading and activities for ourselves, to avail hospitality and make money out of it. And then, of course, in Lusaka, we have a major project of a new depot. And recently, actually tomorrow, Patrick Kondo is going down to Lubumbashi to take over the depot which we acquired a few months ago. And this business of hospitality and storage will become another interesting business line for us. But meantime, it's included here, so you can see it's about 4.3 or so million US dollars. Here you can see each one of them, I mean, all of them together. I'll go quickly through the countries, the different countries, and we start, of course, with Kenya, which is still being the biggest in terms of volume. And you can see this year in 2011, they moved about let's say 1.05 or let's say 1.1 million cubic meters. It's incredible number of sales, you know, and you can see over the last 6 years the growth and development of this business. And then we go to Uganda. You can see it's coming down. I won't go into the explanation. It's a very competitive, very difficult market and so on. For reasons I won't discuss it at this stage. Tanzania, you can see, Zambia, Rwanda, Ethiopia, Burundi. And the group performance, as I said, including trading, including export, is over 3 million cubic meters, which, as you know, is about it's over 3 billion liters sales. In terms of market share, you can see here, I won't go through it. We are very strong in Rwanda, in Kenya, in Zambia we are growing, Ethiopia, not Ethiopia, but Uganda, Burundi, and so on. I just take you quickly through the last 10 years M&A activities and how we became, big player and probably the biggest indigenous player in along east coast of Africa, if not the biggest in Africa. Okay, as you recall, Uganda, we acquired GAL from Galana, Zambia from Juvena, from Netbank. Rwanda, we acquired Shell, we acquired KLSS, TPAG. Burundi, we acquired Total Oil Burundi, Sonitar, C-Corp, Ethiopia Shell, the ex-Agip assets. And in Kenya, as you recall, we acquired a stake in Midoel, but then we sold it at profit. We sold it back to the same shareholders. Some of the recent investment in 2010, mainly in Burundi, we acquired a going concern from Engen, 14 stations from Independence. The Zimbabwe issue or story you know very well. Unfortunately, we had an SPA signed with BP and Shell, together 50-50 with Engen, but much to my regret, we didn't get the indigenization approval. There is a law, they call it indigenization law. Unfortunately, they did not want to approve it. I won't go into the full story, but we backed off from it, and it seems like the one who stepped in is still having issues. I just came across an article in the newspaper. Is still having the same problem with indigenization ministry. And and in Zambia, I mentioned we developed the trading desk. Now, the most recent in this year, we acquired the Dar terminal, the Bujumbura, and we are now about to complete the upgrading, the terminal in Jinja, the Phoenix assets in Kampala, including office block, the terminal in Lubumbashi, which, as I said, Kondo is going down to take it tomorrow. We already completed the transfer into the name of KenolKobil Limited. And we are building now storage in Lusaka and completing Bujumbura. And there is much more to come. Just watch us and follow KenolKobil. Financials, again, this is a chart which I love to show, but I think it speaks for itself, and you can see a record from 1988. I won't even talk about the years that we were making losses. I was not here. But just look at the last few years. And then turnover, just take note, the group in 2011 moved about $2.5 billion US turnover, quite strong. Net sales, actually turnover is net sales. Is that the one? Yeah, it's net sales. It's without the taxes. Over $2.5 billion US. Shareholders' funds, you can see it's slightly coming down in the last a year, 2 years actually, and it's mainly due to the exchange rate and change in revaluation policy. I'm sure you'll be asking about it because it's one of the points we mentioned in our publication today. We changed the policy from revaluing fixed assets to historical values. The fixed assets, this is what you can see. There is a big drop. If you want, you can ask Pat and JJ. They'll give you more details. The big drop is due to going back to historical values. The total capital employed, take note of it because we are including borrowings for working capital. Usually, you know, not everyone would include it, but we do, and we are talking about 150 million US dollars. When it comes to return on capital employed, remember, and I think it's quite strong, it's about 25%. Remember that we have working capital included here. Oh, actually it's there. Here it is. And it's about 25%, as you can see, including working capital. And net current assets, again, it's factor of exchange a lot. This is something which I want you to take note. Current assets over current liabilities. It came down this year. And I heard you to ask JJ and Pat to explain. But basically, it is still above 1, which is good. If I'm not mistaken, it's 1.2 something. Am I right? It's 1.2 something. 1.22, which is still very strong. The current assets ratio. This is another chart which I want you to take note. Though you see, as you can see here, before tax is the blue and after tax is the red one. Take note, you may see, I mean, you see down here in terms of percentage, yes, the main reason for that is actually the trading activities. Remind you, and I mentioned it several times, the trading business line is high volume, low margin per unit. So in a way, but does not mean that we should not be there, because we believe in this business line. We know that it is a great opportunity. And I urge you as well to ask questions why we are there. But when you come in, when we come to contribution to profit before tax or after tax, you'll see what does it contribute. But it does bring down in terms of percentage the return on sales because of the low margin per unit. Okay, earning per share is about what? 20 or 2? Sorry? Oh, it's in US dollar cents. It's 2.5 US dollar cents per share. Yeah, but it's over. It's 2.7 or so. 0.25. So which is 2.5 cents exactly. Okay. The PE. It's one slide that I prefer to leave it for some seconds here for you to look at how much we are undervalued in the market. So look at it carefully again and again as investors. But truly, we are somewhere around the 5 PE, price to earnings. Okay. I just want to list down for you to take note who are the main banks financing us and helping us to move such a big volume and have a turnover of $2.5 million. The main banks are, of course, BNP, and I take note of the BNP sending 4 people coming from Paris this morning to attend this meeting. BNP is a fact, has been for the last many years our main financier. A Standard Bank of London, then including Stanbic, of course, KCB, UBA. We have in total about, NIC, and quite a number of other banks. But I just wanted to highlight the main ones. But you may comment on the whole list. I think they deserve to be recognized here. In total, we have about 360 million US dollars lines. They are all for trade finance. As you all remember, we never had much of a medium-term financing. In 2011, we decided, due to some discussions we had in the board, to review it, and we brought on board about 17 million US dollars medium-term borrowing, mainly from BNP and SBL, Standard Bank of London. And it's actually from somewhere around mid of this year, am I right? October 2011. Take note that all our acquisitions, all our M&A acquisitions have been financed from internally generated funds up to most recently, and this 17 million is mainly for the acquisition of the depots in Lubumbashi, Bujumbura, Tanzania, and the upgrades that we are doing, including in Lusaka. And in addition, we have a CP, the commercial paper. Take note again, unsecured. I don't know how many unsecured commercial papers are in this market, but I know that it's KenolKobil with unsecured, about $20 million US. A dividend policy, you are very much familiar with it. You remember we changed it from 35 to 40 to 45 to 40 to 45% of the net profit, and we stick to it. Okay. Yesterday we had a discussion at the board meeting on the proposed dividend. This was an issue. It's a policy, and we stand by. And I think again, the fact that KenolKobil has been religiously paying dividend, whether it's 30 to 35 or 40 to 45, it doesn't matter. But we religiously have been paying that. Dividend, most of the times twice a year, like this year. Sometime I think in 2007, we paid once because of that acquisition of Kobil. Take note of it. Now going forward, and I'm going to go quickly through it. Of course, we'll continue focusing on the group vision through organic acquisition and strategic partner. And I'll talk about it. Continue developing the African trading desk, which is in our business is considered to be the midstream. We'll continue improving efficiency and productivity, focus on retail and high profit or high margins per unit business lines like LPG, fuel oil, export, lubricants, and so on. We'll continue investing in storage for all products, including gas. And I want you to take note of our recent investment in gas. I'm sure you know about Kampala and Kigali. We are just about to commission a project in Kisumu in Kenya. We have just concluded a storage and filling plant for Lusaka. We are even considering to do the same in Lubumbashi. So just to show you, it's one business line we are very much focused on for further development. And of course, developing the non-fuel. Non-fuel for us is a very attractive business line, mainly to do with property development. I'm sure you have seen some of them in Kenya, and you may ask David and Isaac on their projects. They have done quite interesting projects in Kenya, not only in Nairobi, as far as very remote places in Kenya. We think there is a great future in view of the growth in economy and the overall performance of this market. And we have, in any case, we have the assets. So why not to develop them? We are even looking to the extent of real estate in some countries, not in Kenya to be precise, more in Ethiopia. We are looking into a major project in property development in Kigali. We recently acquired, how big is that? 10,000 meters? 10,000 square meter piece of land in the heart of Kigali. And we are looking at developing, it's just, behind our station, and we are looking at development of this property. Now, going forward, and this has been, on the screen for the last few months. We are looking at developing alliance with a multinational and/or bring strategic partner, investor on board to take the group to its next level of growth and development in Africa. We have become big, but we know very well, and I tell you frankly, I know very well, and we've been discussing it at the board. We know that in order to take us to the next level, in all terms, in terms of expansion, development, investment, M&A, whatever, as well as financing, yes, we need to look at partnering with a strategic investor, a strategic partner that can, together with us, take us to the next level of development and expansion. And of course, the usual stuff that we do a lot, and we focus on it not less than other business aspects, do a lot of training and capacity building across the group, not only in Kenya, everywhere. We continue to be very cost-effective, a quick decision-making organization, and I'm proud that, you know, we are such, and I believe this is one of the reasons we are so successful. And of course, I have a strong and professional management team, and I want to tell you truly, not because I'm the chief executive of this company, we have the best management team in the oil industry. I don't want to say where, but, you know, beyond Kenya even. You know, we truly have the most, you know, experienced, dedicated, professional management team in this industry. And of course, we intend to continue capitalizing on being African player in Africa for African people. And we are making use of it. I want to tell you, most of our managers outside Kenya, they are Kenyans or from other countries in Africa. We believe we have the opportunity to use our knowledge and understanding of Africa in order to continue expanding and developing. And of course, as I mentioned here at the bottom, to continue building the KenolKobil brand strongly. And I think we have developed the platform already, and it is strong enough on which we can build much more foundations to go to and reach new highs in this business of downstream, midstream activities. Okay, I'm actually through, but I love this picture, so I'll leave it with that. Okay, I'm through with my presentation. Carol, I don't know, we take questions at the end. I think Pat will take it from here, more on the financial aspects of 2011 results. Thank you.